Welcome to Kenton's videos. Enjoy the video.
In this video, I will explain how to pay self-employment tax. First, understand that self-employment tax covers Social Security and Medicare for individuals who work for themselves. It's crucial to know your obligations to avoid penalties. We'll guide you through calculating what you owe, making timely payments, and properly reporting everything on your annual tax return. Let's get started on managing your self-employment taxes effectively. To calculate your self-employment tax, begin by finding your net earnings from self-employment. This is your gross income minus allowable business expenses. Next, multiply your net earnings by 92.35% to determine the amount subject to self-employment tax. Then, apply the Social Security tax rate of 12.4% up to the annual earnings limit, plus the Medicare tax rate of 2.9% on all net earnings. Self-employment taxes are generally paid through estimated tax payments throughout the year. You'll use Form 1040-ES to calculate and make these quarterly payments. The IRS offers convenient options like IRS Direct Pay or the Electronic Federal Tax Payment System, known as EFTPS. It's important to pay enough to cover your tax liability to avoid underpayment penalties, so adjust your payments if your income fluctuates. When it's time to file your annual tax return, you'll report your self-employment income and expenses on Schedule C of Form 1040. Your self-employment tax is then calculated on Schedule SC, also part of Form 1040. A helpful deduction allows you to subtract 1/2 of your self-employment tax from your gross income. Ensure all forms are completed accurately and submitted by the filing deadline.
Thanks for watching. Consider subscribing if we helped you.